Well, hi, everyone. Thank you so much for being here. We are very happy to be, firstly, at the end of the year. Thank goodness. I mean, I think 2021 has been a bit of a roller coaster. So I think we're all kind of glad that it's now December and we're starting to taper down. But thank you for being here and taking the time out. I know it's, late in the year and everyone's tired, but I think the information that we'll be sharing with you today will really be, you'll be able to use it full steam ahead in January when you start planning, or when you start the new financial, the new year in your community scheme. So let me go to the next slide. And as we spoke about, we'll be talking about planning for 2022 in your community scheme. And our speakers here today are Willie Roos. He's the CEO of Stratified. Willie has practiced as a property attorney for over 20 years. He's been involved in sectional title management for over 8 years. And Willie started Stratified in 2014 with the goal of, sorry about that. I see this has been messing around. Sorry, with the goal of assisting bodies corporate with their funding without catching them in a debt trap. And Stratified strives to be a fair and equitable money provider for the sectional title industry. Willie has built up Stratified from inception to where it is today, with debtors under management of over 300 million rand. Second, we've got Marissa Joubert. She is the financial director at Stratified. Marissa is a qualified chartered accountant and the current financial director at Stratified. She obtained her BCom honors in accounting sciences from the University of Pretoria, completed her articles with PwC, qualifying as a chartered accountant in 2014. She spent 5 years within the financial services division in Imperial, which is now Motus Financial Services, working with special purpose entities and cell captive structures, and joined Stratified in 2020. We then have Mareliza Burger. She is the head of legal at Stratified. She is an admitted attorney, and she has worked in debt collection for the past 5 years, of which 2 have been in bank collections and the other 3 in levy collections. So now that you know a little bit about us, I'd like to just put up a poll to ask about you. Are you a trustee, an owner, or a managing agent, or a combination? So if you can just answer there, we'll be able to see where you're coming from. Perfect. I'm going to end the poll here and I'm going to just share the results with everyone. So I think I'm so happy to see that there's so many trustees and so many owners that are, interacting with these webinars and that are wanting to get more information. So thank you for being here. And we hope that we can give you some really relevant information going forward. So just as normal, the webinar is recorded and we will share it after the webinar is ended. If you have any questions, please feel free to pop them into the chat box or into the Q&A. And as we go through, we'll try and answer them as we're going. If we can't get to them, we will respond afterwards and send those through to you. So I'm going to hand over to Willie.
Thank you, Daniela. Good morning, everybody. So happy to spend this hour with you guys. The last time for this year. Next year, we're planning some big stuff. You guys will see on the forums and on the emails that we will be sending out. There's some really exciting stuff coming from Stratified to owners, to trustees, to managing agents. And our aim is definitely to assist community schemes by giving as much training as possible, giving people information and assisting in that way to make the industry a thriving industry in South Africa. So we decided to have a chat about planning for the new year, because obviously we're standing at the end of the year. We need to start looking at next year. What are we going to do? How are we going to plan for the new year? is the body corporate or bodies corporate or homeowners associations? Have they got new financial years? When are their financial years, and so forth? And in general, we see that most homeowners associations run like the financial years of companies, or most companies, and they run from March to February. So we're very close to their financial year end. We know that the act has now changed, and lots of body corporates have got different financial year endings now. But we thought it's the right time to actually just have a chat about this. Going through my own financials at the Homeowners Association where I stay, I was looking at the budget, and we've got our AGM tonight, and the budget for the new year is just over 15 million. So it's quite a large amount of money that's going to be spent by the trustees in that, or by the directors in the Homeowners Association. And it is almost like a small little business. And I think the first thing that I want to say is run it like a business. Make decisions like it is a business. Make the decisions taking into consideration your fiduciary duties as it's a business. So if we treat it like a business, and we treat the money as shareholders' money that is in the business, and we're looking after other people's money, then we will make the right decisions. So it's important to run a scheme like a business, business-like. Don't get emotional about it. Don't become involved in personal fights. Stay with the facts, and make sure that the money is spent in the correct way. Very important to make sure that you check your cash flows against your budget. In lots of schemes that we assist, we see that there are levies that are being raised, but the cash flow is nowhere sufficient to actually sustain these bodies corporate. And that's why they then have to go out and borrow money and get money in different ways. So it's important to check your cash flow and make sure that your cash flow matches your budget. Mareliza will also have a chat about that a bit later on, about collections, about the credit policy and so forth, and how we can manage these things and make sure. Make sure that your reserve fund is in place. Make sure that you have budgeted for that, that you've got your 10-year maintenance plan. And if you can't do it yourselves, then get a professional in to assist you. But in general, a 10-year maintenance plan is merely going through the complex item by item, making sure roofs, plumbing, electricity, every little aspect of the common property is being looked at over a 10-year period. Determine how long this will still last. If it will last another 10 years, then that's number last on the list that you're going to have. So make your 10-year plan, start budgeting, find out how much it's going to cost, start working towards saving sufficient money to replace these items when they need to be replaced. Bank accounts, we also see lots of questions on the groups regarding bank accounts. Our preference is that the bank account should be in the name of the body corporate, and where the trustees have the authority over that account, and not in a managing agent's trust account. We've seen over the years too many shenanigans happening with that, where it is in the trust account of a managing agent, and not that we are saying that managing agents would do it, because I think 99% of the managing agents that run trust accounts have done so properly and without problems. But it's only that one person that actually tarnishes everybody then when they don't act in the appropriate way. So get a bank account in the name of the body corporate with the trustees' authorities over it. Make sure that there are a delegation of the authorities who can pay, who can sign off, and who can release and so forth, and follow that to the T. Make sure that that is always followed. The managing agent probably loading, and then the trustees first release and a second release to make sure that that money is released to the correct person. Something that we see that Management Rule 21.4 states is that the bank account should be an interest-bearing account. I don't think that many bodies corporate have got interest-bearing accounts. They normally just put it in a transactional account and there's no interest being earned on it. So in actual fact, to be in compliance with Management Rule 21, one will have to have an account that runs interest and accrues interest on that balance. So have that discussion with the banks, make sure that you get interest as much as possible, because all growth on the money obviously reduces levies, and make sure that people have to pay less into the kitty. And we know that with COVID and all the other problems that are going around, the bad economy, that people are suffering and people find it difficult to pay their levies. So interest, accruing interest, obviously is one of those areas where money can be obtained, and we must make sure that the money is in an interest-bearing account. The trustees must make sure that they get their monthly management accounts, whatever those management accounts are for them. Some schemes want their levy roll. They want to see who's in arrears. They want to see what has come in, what was paid out, just an overview. If that's how you want it, discuss that with your managing agent, determine what you exactly need to know what's going on in the scheme and know what is going on in the scheme. So get your management accounts, scrutinize them, ask the questions. Guys, we see on the different groups also a hunger of owners in respect of knowledge. Owners want to see what's going on in the financials. Owners want to see what's going on in the bank accounts. And because they're part of the scheme, they're entitled to this information. As long as they use that information for the betterment of the scheme, they are entitled to it. A managing agent that tells you that he's not allowed to release this to you because of Poppy is trying to avoid playing open cards. There's no reason why owners can't see this information as long as that information is utilized for the benefit of the scheme. You can't go, and I always use the example, you can't go and get all the owners' names to now go and sell Tupperware in the scheme, and now you've got everybody's email addresses, and now you start selling Tupperware. Not that I've got something against Tupperware, but that's definitely not the intent why you would need somebody or the owner's details and their cell phone numbers and their email addresses. But if you've got a problem, and a legitimate problem, then you are entitled to that information, and that information should be released to owners. And the more information that is released and the more transparent people are in the management of a body corporate, the better that body corporate will become eventually, because people will start trusting what decisions are taken. They will see that correct decisions are taken, and they will see that things are done in an open and transparent way, and they will feel comfortable with paying their money. We've seen too many schemes where people feel uncomfortable. They're not happy where the money is going or how it's spent, and then they stop paying, and that then causes the collapse of the whole scheme. So it's important.
Sorry to interrupt. There's just a question that's come in from Sandra on the topic of Poppy. Can the trustees disclose where there's a unit that is in arrears and what they are doing about it?
So I'm of the opinion that they can disclose that. I know that there are some of the other people on the group that are saying that it shouldn't be disclosed, but I believe that owners are entitled to this information. They should be aware who's not paying, what's not being paid. So in my mind, if you are an owner in the scheme, you are entitled to all the information in respect of the scheme. As long as you utilize that information for a legitimate purpose. I think Nigel Capito says to me, you don't even need to use it for a legitimate purpose. But I think looking at the Constitution and the limitation of your rights, I think from section 36 of the Constitution, I think in that sense, it is required that you always need to have legitimate purpose why you need to have information. And I believe that owners need to know who's not paying. because if somebody is not paying and owners are aware of that, I think that will take that person along. Well, it will take him to a point where that person will then start paying
Yeah, I
his
think it puts
dues.
pressure on.
It puts
Yeah,
pressure. It puts pressure on that
subconsciously.
person.
Yeah,
Correct,
yeah,
correct.
yeah.
So I think it's legitimate, and I think that information should be made available. I mean, we've not seen CSOS's ruling on something like that, but I'm more than willing to bet
Yeah,
that owners are entitled to that,
yeah.
because
And
it's the purpose of the body corporate. They need to know what money is coming in, who's not paying,
yeah,
why are they not paying, and so forth.
yeah. So I think also it comes from I think you need to read what the scheme, how the members are. I'm sure if it's more of an aggressive scheme, perhaps you would know, okay, perhaps not. But I agree 100%.
Then obviously audited. The body corporate needs to be audited. We've had long discussions about auditing. Is there a standard? We know that the rule says that there isn't a standard. Marissa will tell you that as an auditor, they are not allowed to audit unless there is a standard. I think the Audit Professions Act requires that all audits must be conducted in accordance with the standard that is set in the country. So currently that's IFRS, or IFRS for SMEs. So we are of the opinion that the Sectional Title Schemes Act are missing the point here. They're asking auditors to do something which they are not entitled to do, to audit without a specific form or standard. So we believe that IFRS for SMEs should be applied on all sectional title schemes, unless they are bigger and do not fall under SMEs. Your borrowing should be shown in your financials. So if money was borrowed, it should be shown in there, so that potential buyers, when they see this information, and obviously even under those circumstances, a buyer will be entitled to see the financials. So to even at that stage say, but POPI prohibits us from giving you the financials. This guy's wanting to buy in the scheme. He's entitled to make an informed decision. And if you want to make an informed decision, if you're going to buy in a scheme, you need to see the financials. So even from that point, a person will have a legitimate right to see that information. So for schemes to not hide these things, I think those times are gone. I think these things have to be open and transparent and should be shown to owners. Regarding the borrowings that are being shown on the financials, guys, just make sure that you don't get caught in a debt trap. I'm having a chat about that with Fitzon, managing agency. We're going to have a podcast, I think, next week sometime, where we're discussing the debt trap, where a body corporate borrows money and the paying owners will just keep on paying interest on 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 this loan. We have seen in our business how they have paid 4, 5, 6, 7 times the amount that was borrowed in interest over an extended period of time until the levies is collected. In Afrikaans, there's a saying, "Jy maak wolf skaapwagter." If you get the same person that gets interest and that person is also the person that's collecting, you're going to have a problem, because if he's making his income out of interest, he's definitely not going to collect that money as fast as possible, because then he's not going to make his interest. So guys, be aware. Make sure that you've got your agreements in place where it is a fixed term, that you know what you're going to pay, and that you know that this is what will be paid. If I'm not saying a body corporate shouldn't borrow money. I mean, there are circumstances where they should borrow money and where it's prudent to do so. But do it on a basis that you know what you're going to pay, how much are you going to pay, how long you will pay on it. An open-ended contract where you will just get money on money on money and interest on interest is not in the interest of a body corporate. And at the end of the day, we have seen many body corporates going dysfunctional as a result of the fact that all the income is eventually eaten up by that interest. But we'll have a chat about that later on, I think next week, about that again. So make sure that your financials are correct and that the borrowings are on there. AGM yearly. Obviously, the AGM should be held within the stipulated period as in accordance with the Act. All the items as required by the Act must be on that agenda. We've got an AGM template pack for you guys. We have made it available before, but we'll make it available again. These are all the items that needs to be discussed at that AGM. Make sure that all these items are on there. Make sure that you've got the minutes of the previous meeting so that they can be approved. Make sure you've got your budget in place. Make sure that you've got your proxies in place, who's going to vote. Make sure that you know how many trustees are going to stand and any restrictions that you want to place on the trustees. Because owners are entitled to place reasonable restrictions on the trustees, and the trustees must then act within those reasonable restrictions that are placed on them. Guys, choose trustees that are willing to work for the betterment of the scheme. It's important to get people that are passionate about sectional title and are passionate about their property and want to build the property and want to look after the property. Because if you don't have trustees that are passionate about your scheme will lose value. So you need guys that will work in schemes. When I was still running schemes, where we had people that volunteered, and say for instance the scheme only required 5 trustees and there were 12 people or 7 people or 9 people that then stood, we would bring those other people on board. We would set up different committees and we would bring them on not as a trustee but as a committee member, and let them start understanding what the trustees do and teach them over time, and eventually those people will take over roles and they will then become trustees. So train them, bring them in, let them be part of the meeting. They cannot vote, but they can have an opinion. They can say this is what we think, but obviously at the end of the day the trustees are the ones that make the vote at that trustees meeting. But bring them in, and where owners want to be part of those meetings, bring them in, guys. It's important to bring in as many as possible, because at the end of the day, the more participation you have in your scheme, the better your scheme will run at the end. Managing agents, I think it's very difficult for a scheme to operate without a good managing agent. Maybe small schemes can run without a managing agent. Maybe in small schemes, it's better to maybe have an executive managing agent that just makes all the decisions themselves. But it will be very difficult for schemes to do all the administrative tasks by owners that are actually working and that it's not their full-time job. So it's important to bring in a very good managing agent. Make sure that your contract is in place. Make sure that you've got a properly negotiated contract. Go through the terms. Decide if this is what you want in your scheme. Is this the type of managing agent that you want? What the tasks are. Look at contracts. There are various contracts available on the internet where you can have a look and see what the different things are that these managing agents provide as a service to their clients. Some provide just accounting services, others attend meetings, others attend AGMs and run AGMs. So have a look, make sure that you know what you are getting. As I said earlier on, set up some portfolios. Have a security portfolio, have a financial portfolio, bring other owners in that as well, get other people's input into that as well. The more the merrier. At the end of the day, it is the trustees that make the decision, but if you can bring other owners in and you can hear their voice, they don't feel disenfranchised. And it's important that we understand that sectional title is like Ubuntu, where we all work together for the betterment of everybody. So it's important that we bring more people in and let them be part of this process. I said it a couple of times already, transparency. Transparency is of utmost. I think it is the most important thing in running a scheme. People must know what is going on. If owners, nothing can be going wrong, but if owners don't know what's going on, then they think something is up. So let them know what is going on. Open everything. Let them see the financials. Let them see the money coming in. Let them see the invoices. let them see the different invoices that there were. Make all these things available, because transparency is king. If it's open and it's not hidden, we know that things are running properly. I think we've all in this country have become so tired of corruption and things going missing and astray that everybody sees corruption around every corner. And I think in people see it in schemes, and we see it on the groups, that there's this complaint, constantly complain that the trustees are doing this and the trustees are doing that. And at the end of the day, it's not trustees and us. That's not how it works. The scheme is all of us. We are the scheme, and we must all work together for the betterment of that scheme. Make sure that your insurance is in place. Make sure that you get some quotes on a yearly basis. Obviously, you need to also value your properties in accordance with the Act every 3 years, but get quotes in, see if there's a saving to be made by moving your insurance policy from one insurer to another, see if you can get better cover, and make sure that there's also fidelity cover in place for those that require fidelity fund cover, like the trustees and the managing agent.
Willie, just before we continue on, there's 2 quick questions. Are there any legal consequences for submitting AGM minutes later than 7 days?
Unfortunately, there isn't. The Act does not say that it says it must be submitted. All minutes must be done within 7 days. However, those minutes are only going to be approved at the next AGM, but owners need to see them within 7 days. But unfortunately, there is nothing that says if you don't do it, then this is the consequence of that. So in that way, the Act is a bit of a lame duck. There isn't enough teeth in that respect. And obviously, if you go through a CSOS process and you want to force the trustees then to do the minutes, it's going to take you a couple of months. I mean, Mareliza will tell you it takes months to get to a point where you get an adjudication order. So you're not going to get those minutes in 7 days, unfortunately. But put the pressure on. Make sure that they are aware that they should do it in 7 days. Send them a letter, an email. You are required to provide this in 7 days. Please require it. Please supply it. So put the pressure on, but unfortunately there isn't a penalty in respect of that.
Okay. And second question, can the managing agent also be the executive managing agent, and are there additional payments?
Sure. I am not so au fait with executive managing agents. I have seen over my desk that CSOS has drawn up a list of executive managing agents. I don't know what is the purpose of that. Does that mean that those will be the only people that will be allowed to be executive managing agents, or will other people also be allowed? I'm not 100% certain. I know that, and from schemes where we are involved, and I'm thinking specifically on schemes that were under administration, and those schemes then went under executive managing agents, and in those schemes, in some instances, the managing agent then became the executive managing agent. So I would think that it's possible. I'm not 100% certain. I'll go and check for you guys and come back regarding that. And obviously, the executive managing agent, the function of the executive is to act as if they are in the state or in the place of the trustees. So the executive managing agent will then make those decisions that would normally have been made by the trustees in respect of the scheme. I think the last thing that I just wanted to touch on was tax. It's also something that we see quite a few questions on. So schemes needs to register like anybody else in respect of income tax. However, levies are exempt from tax, so a scheme does not pay income tax on levies earned, but a scheme does pay income tax on any other income bar levies. So for example, a scheme has got antenna on the roof, and they're getting 6,000 Rand a month from cell C. So 72,000 Rand was earned during the year, then that has to be disclosed and income tax will be paid on that. There is a general exemption of 50,000 Rand, which is the first exemption in respect of that. So anything over and above 50,000 Rand, tax will be paid on that. So things that will fall under other income will be interest, will be penalties, things like that. So you will have your interest, your penalties, rental of parking spaces, any other income that is derived except from levies. Don't have a fallout with the tax man. We never want to see that ever, because at the end of the day, owners will remain personally liable in the scheme in respect of debts of that scheme. So we don't want to go down that route with a scheme. Okay, I think that's what I wanted to say. Marissa?
Okay, so in terms of the importance of budgeting and how to determine what to budget for, I think it's important to note first that financial years and calendar years don't necessarily run at the same time. I know this can initially create some confusion for people who are not involved in financial years generally. In terms of the Sectional Title Schemes Management Act, all schemes registered after October 2016 automatically has a financial year that runs from 1 October to 30 September. But anything that was registered before that can have a financial year end of any other month in the year. So you will have to determine what your specific scheme's financial year end is to determine how to work on your budgeting process. Now, like Willie has said earlier, it helps to look at running your scheme like a business, especially from the financial side of looking at ongoing budgeting, monitoring your budget, and looking at your cash flow review for the financial year. So what I would recommend is to start by analyzing your current year, looking at monthly reporting of your budgets versus your actuals to see where you are not on budget. And then also to have quarterly reviews of each quarter where you can have maybe a informal trustees meeting to just discuss and make sure you're on track. And then the importance of cash flow analysis, because just because something on your income statement is going right doesn't mean the cash is in the bank account. So you want to be able to identify if there are any unplanned expenditures that have been actually paid through the bank that were not necessarily budgeted for. And you also want to see where there are any situations where levies have not been received that should have been, because the income side will be accounted for whether it is received or not.
Marissa, sorry, can I just jump in? I just saw a question that popped up on my side, and it says that the person was denied access to the details of the trustees. And I mean, the act is lying open in front of me here. And I mean, if you look at Sectional Title Schemes Management Act and you look at section 3.1, and it is 3.1N, it says the body corporate must comply with a reasonable request for the names and addresses of the persons who are the trustees of the body corporate in terms of the rules and who are members of that body corporate. So if there's a reasonable request, they must give it. I mean, they can't just give it. So it's what I'm saying the whole time. There must be transparency. I mean, the act requires that. So unfortunately, one will have to go through the process of referring it to CSOS as a dispute. But I mean, that is what you will have to do. But the more people start asking these questions and the more people go and get these orders, then at the end of the day, we will see compliance. Sorry about that.
No, not a problem. So in terms of looking at your budget for your next financial year, it's helpful to build a timeline. So determine when your next AGM will be taking place, when it has to be scheduled for, and then make sure that you leave time for a first and second review so that you can work through the budget, so that there's time for all of the trustees to work through the budget and make sure that they are happy with it being complete and taking into account all of the relevant factors. And then from there, work backwards to determine when you need to start working on that budget so that you can afford yourself the necessary time. Then it's also good to find out whether your managing agent will be assisting you in this process. and then throughout the year to keep track of the unplanned expenditure that you have identified to see where you need to incorporate it into your new budget. Is it something that will recur? Was it a once-off? Was it something that you missed in your previous budgeting period that should have been included? Then Willie touched on the 10-year maintenance, repair, and replacement plan. You have to make sure that you have one in place. If you don't, then it's time to start talking to a service provider to assist you with putting it in place, because you need to include your reserve fund levy requirement in your budget to ensure that you can legally raise those levies on in your next financial year. Then we have the question here of what if an item is not budgeted for. We had a bit of a discussion around it, as to say the trustees have a certain scope within which they operate in law. And then there's my opinion of in terms of financial sense, it makes sense that a trustee should be able to reasonably adjust the budget to say that something has changed since we determined this budget and we now need to incur a different expense. Unfortunately, the legal minds don't completely agree with me on that in terms of within the law. So I don't know if Willie and Mareliza want to weigh in here.
Yeah, so I can just say, I think firstly, Prof. Graham Paddock says that the budget is the budget. So if you have not budgeted for an item, you cannot utilize money from another item to pay for that item. You will then have to go and expense that item by way of a special levy. So, and you will then need to determine if it is, can it wait? If it can't wait, then obviously you can raise the special levy. If it can wait, it must wait for the next year. So that's his opinion. I'm not 100% convinced that he's correct. I think that a budget is exactly what it says it is. It's a budget. It is not an actual. So once you have a budgeted amount, we cannot say we're going to spend 113,222 cents on the electric fence. We don't know that. We think we're going to spend more or less 130,000 Rand, and that's what we put into the budget. So if there's a bit of a surplus, then one can utilize that for other stuff, as long as you then just disclose that and you let owners know that that is what you're doing. So to me, I think it's all about the bottom line. You need to stay within the bottom line. And I think that the authority for that, or the right to do that, falls within section 3(1)(t) that says that the body corporate can in general to control, manage, and administer the common property for the benefit of all owners. So it's a catch-all portion of the act, and I think it falls within that, because a budget is merely what it is, a budget. But to go and now go and spend millions of rands that were not budgeted for, I think then you're going to have a problem. But if you spend a bit from electricity to maybe a repair of a water pipe, I don't think that that's going to create a problem, and I think that shouldn't create a problem. But you can't go and do major changes and renovations, and because if they're not
which
budgeted
is
for.
what your 10-year plan is for, so that you don't have
Correct.
to necessarily include all of those major things in your normal budgeting cycle. It's a different process to pick up on that.
Correct.
I see there was a question about VAT that Sandra posted. She asked, why can't a body corporate claim VAT back when doing tax returns? In order for you to claim VAT from SARS, you have to be a registered VAT vendor. In order to be a registered VAT vendor, you have to have VATable supplies of at least 50,000 Rand per year. VATable supplies is a defined term within the VAT Act, and I can't see that there's anything within a body corporate that would qualify as a VATable supply. So if you can't register, can't get a VAT number, can't claim VAT. Okay, then we
saw, sorry, I also saw that
fine.
there was a restriction placed on trustees not to spend more than 50,000. They then went ahead and spent 125,000. And the question is, what is the situation regarding that? I would think. So obviously they've acted outside of their authority. So once you act outside your authority, then there is the possibility of liability and personal liability for those trustees, because you are not acting in accordance with your fiduciary duty. So there is a possibility, but the other side of the coin is that you can't just claim in our law for any damages. There must be real tangible damages suffered. So if 125,000 Rand was spent and they were only allowed to spend 50, and it was spent on a legitimate cause, and it was legitimately spent and there was no problem with it, then the fact that they've exceeded their authority, yes, that was not right, but on the other hand, there was no damage suffered, and as such, you will not be able to recover damages. If they have spent it and it was a frivolous spending spree, then obviously you will be able to recover that from them because they've acted outside of their authority and outside of their fiduciary duty. So it's not a simple question that yes, they will be liable. No, they won't be liable. One will have to look at the circumstances, and a court will have to determine will they hold them liable under those circumstances. But they're definitely acting, they were definitely doing something that they shouldn't be doing. And they should be slapped on their knuckles. They should be definitely reminded that they can't do that.
Okay. Then in terms of specific abnormal items that you should be including in your budget to enable your trustees to act and also to create a bit of a buffer for the scheme is future non-payment of levies, right? You have to budget, include a provision of somewhere between 5 and 15%. You'd have to look at your historical recoveries to see whether you fall on the lower or the higher end of that spectrum, as an average, so that you take into account the possibility that some owners may not pay. This will enable you to still have the cash flow to manage the scheme effectively, even if some of the owners don't pay. Then you need to budget for bad debt or make a provision for a write-off of current arrear levy balances. So balances that are lying on your balance sheet side where owners historically have not made payments. This will enable you to utilize this provision as a cost of collection for the arrear levy balances. And then you need to budget for legal fees so that the trustees have the approval basically to incur legal expenses. If it's not in the budget, they can't spend it. So if they can't spend legal fees, and they can't institute any legal proceeding against non-paying owners in order to recover those outstanding levies. Then one other thing that I wanted to mention is that in terms of the Act, the trustees are allowed to increase levies by 10% in the new financial year without approval, in anticipation of the AGM where the budget will be tabled, to ensure that there's not too much of a discrepancy from the previous levies to the new levies that will be instituted once the budget has been approved. And then we do have a free budgeting template that we'll also be sharing afterwards via email that you can use to get your budgeting process going.
Thanks, Marissa. It's a very important thing. Something that we rarely see is our trustees and our clients don't budget properly for the legal cost. So I think the scale that you gave there, like a 10 to 15%, is a good area to work from. From my side, a little something when preparing for 2022, which is crazy that it's already this time. We definitely advise our clients to put something like a credit policy in place. This is just a good guideline, and it gives a little bit more fat to the few sections with the Act sets out on collections. It gives you a better guideline in terms of payments and a clear course of late payments of action. So clear course of action for late payments. So I know from which I've also experienced, we also recently had our AGM, and it was very clear that everyone wanted to be compassionate about their neighbors, and they wanted to not be too harsh on legal, given the circumstances that we are in with COVID and so on. But something that I always say is a good fences make good neighbors. So
proper, have this guideline in place. It just gives you a good it just sets out the procedures very well, and I think it's also nice from defaulting owner side to know what to expect. So from the next slide, we've just set out after this webinar, we'll have some free resource available, such as the credit policy. But things we add are payments, or when are payments due, what type of interests are charged, and the list goes on. Just how payments are allocated to legal, how payments are allocated. That is generally when we want to make sure that whatever legal action is already in place, you want to make sure that you don't, for every 5,000 Rand that the debtor pays, now need to start a new action. Special payment arrangements, these are helpful when people know that they have the option to contact the trustees or directors and to just explain the current situation, how to deal with you know, how to pay their levies, and just to make sure that everyone remains on the same page when payments can be expected. What I do want to say on the credit policy, it's important to remember that this does not replace all the necessary resolutions that you need to put in place. So it's always still important to put to do your like your interest charge is required by the trustees resolution, and then any legal costs that has to come from a unanimous resolution that will obviously be added onto your management rules. So it's important to make sure that you have all of these resolutions in place before you just run with the credit policy. So on the next slide, we've discussed just how to make provision for legal fees. You can add that into your management rules. We all know that a lot of our clients also come with us and they struggle because they have a list of expenses that they cannot recover from the debtors. So you are able to make provision for this by changing your unanimous resolution, by changing your management rules in way of a unanimous resolution. But it is also important that you need to make sure that your management rule are not are not unreasonable. So it's always important. The Act requires specifically that it remains reasonable. So I think if you can set it out and you can submit to CSOS and to get their approval, this is a good way to make provision for that. We also just put here just the disqualification of trustees when they also default, to make sure that the Act makes provision for that. And you're also able to exclude owners that have defaulted or in which you've obtained a judgment from. So that kind of makes your makes it slightly easier to get to a quorum. And then obviously your HOAs are bound by their constitution. So you just need to go and review what your constitution says, because all owners are actually contractually bound by the constitution. And if the constitution sets out that they need to pay fees, then they must pay fees. One of our very good partners, TVDM Consultants, can assist you guys. Their contact details, we do have a link to their website on our website to assist our clients with changing their management and conduct rules to this effect. And then in terms of collecting levies, that can become a headache. The Act allows us two different options. You can either go through CSOS or you can go through court. CSOS has good solutions such as rental attachments and adjudication. So obviously getting a judgment for the defaults, the arrear levies, which you can then take to court and it becomes an order of court. Attaching rental is something that I often advise our clients to jump on immediately when they start defaulting, and you see that it's a unit that are being rented out. I mean, it surely is quite unfair for a owner to collect like a rental and not be paying the body corporate the necessary levies. The problem with CSOS is it is a lengthy process. It can take up to a year, oops.
Sorry, has
So-
something gone wrong there?
No, from my side, but I do have them here. Yeah, so just in terms of collections, I think it's Willie mentioned something earlier that I think is very helpful, and it's an issue that we also see in CSOS matters. So to appoint someone, he mentioned something like portfolios, so having like a collections portfolio to get put together, owners that might have some legal background or that has some interest in legal, and then make sure that this person runs the process and manages it actively. Nice things about CSOS is that you can, once you submit your application, you get allocated a case number and an adjudicator. You are able to review this adjudicator and say, I'm satisfied, or I'd like to have another adjudicator review my case. They also show the background of the adjudicator. So if you're comfortable with this person's background, like legal experience and so forth, that's the one you can choose. Because the issue is you need to make sure that your facts remain clear and the same throughout the whole process. Because the sad part of CSOS orders is that it is not appealable on facts, but only on law. So an example of this is when a adjudicator makes a typing error, and they hear somewhere they don't get the numbers correctly, and they put their 10,000 Rand instead of 100,000 Rand. Unfortunately, that is something that you cannot appeal on, as crazy as it sounds. Yeah, I think I've covered everything. Oh, and there's another thing, yes. Just what's important to remember is if you go to CSOS, you are not able to go to the court or go to a match court or high court as well. So you need to run through this process see it through to the end, make sure that you get this order, and only then you can take this to court, make it an order of the match court or the high court, depending on the jurisdiction, and you can then give it to a sheriff to attach the movables. So that's the two downsides, or the three downsides of CSOS. However, it is less expensive than the court process, which can also be quite lengthy. Depends once again how it is managed. When the normal way is that they'll send out a letter of demand in terms of our sectional title, Schemes Management Act. They'll wait 14 days and then they can summons the owners. And the process can then split. It can become defended, it will be undefended, you can get a judgment. So it's a back and forth throughout the whole process. It can become defended after you've obtained a judgment, so then they can apply for a rescission. You can attach the movables, and then you can apply to the court to attach the immovable properties such as the unit, and they can throw in another roadblock and by opposing that application. When you think you are homebound, they might throw you another curve and bring an application for rescission of the order to attach the immovable property. So it becomes quite tricky. However, managed properly, I think if you have a committee that oversees your collections and make sure that, you know, from the first month all the way to the 48th month, which is our estimate timeline, depending on the process, if you make sure that it is managed properly and the person is invested actually in making sure that body corporate fees are utilized correctly by the attorneys, it is possible to get a successful order and replace that owner with a paying owner.
Thanks, Mareliza. If I just run through the questions quickly, there's a couple of things here. I see a complex that doesn't have a POPI manual. On our website, there's a POPI PIA manual. You can just go down in there, download that, amend it to fit your scheme. So there is an example. You don't have to go and spend 15 or 20,000 Rand to have that drawn up. There is an example for you. There was a question, what happens if trustees are not bothered and the managing agent is left basically on its own? the problem is in law, you have a relationship of master and servant. It's a terrible way of saying it, but that's unfortunately how it was described or is described in law, the relationship between a managing agent and the body corporate. So the body corporate is the master and the managing agent is the servant. So the servant cannot act unless the servant is given instructions. So if you have a body corporate that don't give you any instructions, you're on a risky ground if you just do whatever you please then. So I would be very loath to manage a scheme like that. I would rather than request that one of the owners bring an application to place the scheme under administration in terms of section 16 and get the court to appoint somebody to look after the scheme, because you're going to get yourself into trouble. I would never go and do something like that. There was a question about writing off levies. Can one not recover that levies always at the sale? One is supposed to recover all the levies in terms of section 15b3 at the sale. However, you can only recover to the value of a property. Nobody will ever pay more for outstanding levies than what the property is worth. So in our business, we see on a daily basis owners that owe more than what their units are worth. So you would see a unit is worth 350,000 Rand or 400,000 Rand, and the outstanding levies already stand on 700,000 Rand. There is no choice to get that unit back into the economic sphere. An amount will have to be written off. 400,000 will have to be written off because nobody's going to pay 700,000 Rand in levies to get a 300,000 Rand unit. So that's the economic reality of it. So in certain instances, you will have to write off levies.
And then if you have made provision for it in your budget, you will have protected your scheme from the fallout of not being able to recover that cash flow.
Correct.
You won't be depending on that money coming in order for you to do the necessary things that you need to do to keep the scheme going.
So I think it was Sandra that said that she's not happy with it or she's not comfortable with it. I mean, in general, one should not be comfortable with it, but unfortunately, there are circumstances where this is necessary. But it's a last resort.
And budgeting is usually done from a prudent point of view. So what is the worst case scenario so that we're prepared for that? It's not so that we can make the worst case scenario happen.
Correct. And then I see a budget that is increased by 109%. So a budget is merely the function of the amount of money that's going to be spent. So if that is what is required and that is what needs to be spent, then unfortunately it is what it is. One will then have to go through each and every item on that budget and see which ones you can exclude. So say for instance, you've got security there. Can I exclude security? It's going to cost us 25,000 Rand a month for the security company for the 3 guards. Can we exclude that? No, we can't. Well, then it must stay. Then unfortunately, what can we do? Can we exclude the maintenance? No, we can't. Can we exclude this? Yes, we can exclude that. Right, now we can go down from 109% to 107%. So that is the exercise that will have to take place at that AGM. And if there's a quorum or if there's no quorum and the meeting stands over to the next week, half an hour after the start of that meeting, then you have a quorum, then those people that are there are going to make the decision. So unfortunately, I mean, one does not want to really see that. You want to see that the decisions are made by majorities, but unfortunately, that is how it is dealt with in the Act, and to break a deadlock. So whomever is there, if there's only 5 people there and there should be 30, then those 5 people are going to make the decision. Then owners should start becoming involved in their schemes.
And if you're unhappy with the percentage increase for a specific item, then you can ask for the support. What did they base that increase on?
Yeah.
There will have to be, if it's that large of an increase, there will have to be a quote or a specific reason why it would have had to increase by that much. So go line by line through the budget, see which items have increased by large percentages and determine what the reason is for that large percentage increase.
Yeah. Definitely, CSOS can grant orders for the attachment of rental. The rental is then paid to the body corporate until such a time as the arrears are paid. And once that has been paid, then obviously from there on, the money will go back to the owner. Then there was a question, can we refuse certain services? No, you can't. It's called spoliation in our law. You cannot take the legal action into your own hands. You need a court order to cut somebody's water, electricity, services, and so forth. So you are not allowed to do that. So unfortunately, a body corporate will have to institute through CSOS or through the court some form of legal action or action against a defaulting owner.
Yeah, we actually did a webinar on that earlier in the year with Jolene from CSOS. So we'll also include a link to that.
Yeah.
I see Sharon asked, when making payment arrangements to catch up arrears, should we get the member to sign an AOD, an acknowledgement of debt, Mareliza?
Yes, I did reply and I told her it's a very good idea because it avoids or catches them by not being able to deny liability later on in illegal collections. And then I also saw Lindy asking about an attorney transferring property without a clearance certificate, which is quite interesting.
Okay, so shall I quickly go on that one?
Yeah.
So we had exactly the same fight yesterday in our office. So in terms of section 15b(3), it requires the attorney that does the transfer to sign a document or a certificate that is lodged with the deed in the deeds office that says the amount has been paid to the body corporate, or that an arrangement has been made with the body corporate to the satisfaction of the body corporate. So once one of those two things have happened, the conveyancer can then proceed and they can then transfer. So they don't necessarily have to pay the money. They can also have an arrangement in place. One must be very clear that that arrangement must be to the satisfaction of the body corporate. You must make sure that it's unconditional, that they can't just walk away from it. And you must make sure that the correct amounts are in there. Then they can transfer. And then in general, they would pay within 3 or so days after the date of transfer. What happens is on the date of transfer, the banks get notified that the transfer was registered. The banks will then give instructions to their attorneys to make sure that that is so. So the bond registration attorney will then confirm with the bank that it has happened. And the guarantees will then be paid out the next day. And the day after that, then the conveyancing attorney should pay the money over to the body corporate. So it takes normally about 3 days or so after transfer, and then the money is paid. But there must be a certificate or undertaking in place for them to do so. We see that some conveyancers don't get these undertakings, and they would then transfer properties without an undertaking in place, and then we will see that payment is made eventually once you start threatening them because they cannot sign that certificate. It's unethical conduct on their part. So you will threaten them through the Legal Practice Council. But the ultimate way out of it is in terms of Section 6 of the Deeds Registries Act to cancel that sale. We've just gone through one of those where a fictitious clearance figures were issued by a friend of the seller, pretending to be the managing agent, and they then issued these figures, and for 6,000 Rand, and I think it was over 120,000 Rand that they were liable for, and the unit was transferred, and the conveyancer signed, unbeknown to her, she signed the document stating that she has paid the clearance figures. And then we had that transfer cancelled in terms of Section 6 of the Deeds Registries Act because no payment was effected. So there is a process that you can follow if that happens. So all is not lost when that has happened. So yeah, that's it. I don't know if there's anything else.
I think that was it from our side. The questions that we didn't get to, I think we've answered majority of them. If we've maybe missed out on one or two, I will take those down and then we will share answers to those after the fact. But Willie, I don't know if you want to quickly just run through the Stratified Model for us, just to explain that to everyone.
Okay, so the Stratified Model is different from the other models in the sense that it's not a loans model. what we do is we purchase the debt outright from the body corporate. So we go and have a look and we see what is the outstanding levy book. Say, for instance, there's a 1 million rand outstanding levies in total. We would then analyze that individually, every debtor, and we would put a value onto that. And we will say, in terms of debtor A, we're prepared to pay you 62%. In terms of debtor B, we'll pay you 70%. In terms of C, 32%. That one 40%. That one 16%. That one 80%, and so forth. That will then eventually give us an overall amount or overall percentage that we're prepared to pay for that debt. And we will then pay the body corporate, say, for R1 million, 600,000 rand, for argument's sake. That money then becomes the money of the body corporate. Stratafin will go and collect the R1 million at our risk and our cost. So if we can't recover it, it's our problem. We pay the legal fees for that. The body corporate does not pay interest on that money. So you know what your haircut is. You know what amount you're going to get. You're not going to be paid R1 million for the R1 million worth of outstanding levies. And in 5 years' time, you've repaid R3 million in interest. And in actual fact, you've gone backwards to the tune of R2 million actually. The levies are still then not collected. So our model is completely different. We try and put a realistic value on that debt because we understand the collection process. I mean, that's what we specialize in. It's also very difficult for us at the moment with COVID and all the regulations to get these things through court. And we don't make that problem the body corporate's problem. They get what they get. They know their haircut. They know what they're going to get in their pocket. They don't have to repay it. And they've got funding to proceed and pay the council or whatever they need to do with that money.
Super. Well, thank you so much, everyone. Yeah, thanks for joining us today and taking the time out of your day. We really do appreciate it. You will be receiving an email within the next couple of hours with the recording, with these slides, and with all the free resources that we were discussing today. And thank you, Marissa, Mareliza, and Willie, for giving us all this relevant information. So thank you.
It's a pleasure.
Thanks,
Thank you,
guys.
Daniela.
Thank you. Right.
Thanks, everyone.
Thank you.
Thanks. Bye.
Bye.